Welcome to Decentralized News, our weekly coverage of Bitcoin, cryptocurrencies, DeFi, and the macro news that affects it. Welcome in. This is Peter DeVries, joined by my co-host Ozzy, my Canadian counterpart. This is not financial advice. Please do your own research, but let's jump right in. We've had a couple weeks off, a lot always going on in the space. Kind of one of the big stories that's been going on these last couple of weeks is a Bitcoin rally coming off of the Blackrock Spot ETF application, the SEC's reaction, and then all the refilings from all these other big groups, Wisdom Tree, VanEck, Invesco, Fidelity, a bunch of others. So basically, BlackRock filed its application to launch their iShares Bitcoin Trust last month, and now everyone has refiled. All of them are now talking about having a surveillance sharing agreement with Coinbase. And Coinbase, in this move, has partnered with Nasdaq to bolster its market surveillance program through a bilateral surveillance sharing agreement. So with Nasdaq, the new
Let's be clear here, though. BlackRock isn't the only one that's partnered with Coinbase. Sure. Every single investment firm that has launched a spot ETF or has filed for one has listed by Coinbase as their partner. So they're really getting some love from the traditional market right now.
Yeah, it's interesting. And Coinbase stock has rallied too, and they're being sued by the SEC. So yeah, the whole thing is really interesting. But the new BlackRock filing and all these other included details of a June 8th agreement between the Nasdaq and Coinbase intended to supplement the exchange's market surveillance program and provide access to data on spot BTC trades. This is to alleviate concerns expressed in previous spot ETF rejections that the Bitcoin price can be manipulated, although it should be noted that there is a futures ETF, and this is why Grayscale has sued the SEC, stating that the price used for the futures ETF should be good enough for spot ETFs. And they even had a tweet today about how that 2 times leverage Bitcoin futures ETF is more dangerous than the spot one. But also today, Jay Clayton, the former SEC chairman, was on Squawk Box saying that these new filings and the surveillance agreements, if they demonstrate to the SEC that there is no difference between the future and spot ETF, it should get approved. But he seemed to be pretty bullish on it being approved.
I mean, everybody seems to think it's an if, it's a when, not an if. If we look at all of the kind of opportunities that are there, you've got almost 20 firms filing for an ETF. And for the first time, the SEC is actually answering them and telling them what they need to change rather than just rejecting it outright. So this is something that we haven't seen in previous ETF kind of speculation rounds. And
right, a little bit of back and forth, actually.
Yeah, we're seeing back and forth. And the other thing is that we're actually seeing traditional firms apply. It's not Grayscale, DCG, which are ARK Invest, which are a little bit more kind of newish. We're talking firms that have over $10 trillion of assets under management. And BlackRock,
the biggest firms with relationships with regulators. What was it, the 575 to 1 in their ETF filings?
Exactly.
Yeah, and we're seeing that back and forth, which maybe it could be argued that it's because of BlackRock. Oh, what's going on here? And they're following BlackRock's lead with these surveillance agreements. So that's what is different this time when it's the surveillance program.
Yeah, the shared surveillance, which is important. So I think that's an interesting piece to think about. I think it's a when, not an if, and my when is October, November of this coming year. They need 120 days. I am assuming it'll line up somewhat with the Coinbase case, and whether they get their argument to dismiss the case approved, or if we see some rulemaking done before the end of that 180 days that was accorded to the SEC during the Coinbase case.
Yeah, or just more back and forth that could delay it. Who knows? No one can really predict. But there was some initial estimates of 40 to 250 days, like 50 to 250 days, which would put it in line with the halving cycle.
Oh, absolutely.
which is interesting. But it also brings up the question is what's different about this halving cycle compared to the last three? The first one people throw out because it was so new, so just very little people involved. But there have been some interesting changes. One is this potential for a spot ETF, but the other is an interesting chart I've seen floating around on Twitter, and it's the Bitcoin balance on exchanges as a percentage of circulating supply. So through each of the past halving cycles, this number continuously went up, which makes sense because we're mining new Bitcoin. Now over 90% of the Bitcoin has been mined. And now what we're seeing is this is the first halving cycle where this number is starting to decline. So the percentage of circulating supply of what's available is starting to go down in terms of what you can buy. And it's hard to imagine there will be temporary trends, but it seems like this could be a new long-term trend.
I think that, I don't know if it's a long-term trend. I think at the top of the bull market, we will see a significant amount of Bitcoin on exchange. I don't think that will change because people will still want to take profits. But people are more and more hoarding their Bitcoin because they're seeing the value and they're seeing all of these big players enter the space and they're saying, hey, I was right about Bitcoin. I'm going to keep holding it. I'm not going to get worried. We were having a little bit of discussion before the show. You're like, I'm not going to sell Bitcoin to buy altcoins or sell Bitcoin really to buy anything. I'd rather hold my Bitcoin and maybe have to use my line of credit or liquidate other assets than liquidate my Bitcoin. And I think that's maybe a general feeling that we're seeing in the crypto market. And I think just more people are not trusting exchanges and tired of using exchanges.
Yeah. No, that's true. I do feel that way. And yeah, just an interesting trend. It'd be interesting to see how it plays out. And what you mentioned about, if and when we see new all-time highs, which I certainly do expect, how this chart changes a little bit. It's definitely something I'll be watching. It topped out around, 17-18% towards the last halving cycle, or the last bull market, top of the last bull market. But we're now below 15%, approaching 10%.
We're about 12.5% right now. I would assume that we probably, if you look at the numbers, the amount on exchange increases significantly between epochs. And so I'm assuming we might see up to 20% on exchange heading into this next bull market. We're seeing a greater decline though that compared to other times. And other times we haven't really seen a massive decline. But this time we have.
I could see this chart going down perpetually. That's how I imagine it. There will be times when it goes up. But if the network continues to expand and we continue to see adoption, especially if we see Bitcoin dominance continue to go up over time. Yeah, I don't know. But anyway, we'll see how it plays out. We'll be watching this one. Yeah. But in terms of what is different this halving cycle, we touched on it a little bit, but BlackRock and other asset managers are getting closer to a spot ETF. That is different this time around. And it has caused a lot of people to actively accumulate Bitcoin recently. And we've seen Bitcoin dominance affected by that as well. In a July 5th interview on Fox Business, BlackRock CEO Larry Fink said Bitcoin is essentially digitizing gold, and that it is an international asset. I thought that was a really interesting quote. Not associated with any national currency and their inflation risks. So taking over as that store of value asset.
Yeah.
And
it's pretty interesting just because it is a huge flip for Larry Fink. And it kind of has a good sense of bringing in non-traditional investors. So, people that are really coming from the TradFi market, non-traditional crypto investors. And I think that's going to maybe have an impact as we look into the next cycle. These spot ETFs really increasing the potential for adoption from just about anybody.
Yeah, that was also one of his arguments, that it democratizes and makes it easier for more people to access the market, which, yeah, makes sense. But there are some people that think it's dangerous they're going to custody it for you. You're not actually going to have your Bitcoin, although they do buy and sell it, and it will affect Bitcoin price. But if you're buying the ETF, you won't physically own it. BlackRock will have it. But yeah, it's still an exciting development. But when this idea of an international asset, it really got my mind going about another thing that has changed in this halving cycle, and that's the emergence of AI. And with crypto and AI, I've always been searching for where is the connection? Where is the connection? And then this story came out about AI agents and Bitcoin Lightning, and basically AI agents being able to use Bitcoin on their own. And there was also an article or an essay from Arthur Hayes saying that AI would choose Bitcoin. But anyway, so we have this new possible use case. Now, an AI agent is just, can you describe it a little bit? What does an AI agent mean to you?
An AI agent is basically an AI that performs tasks for you and automatically, and it might even engage other AI in completing said task.
They may need a currency, basically.
Yes, so they can conduct transactions. They might interact and therefore need to interact using funds or microtransactions, like paying someone on Fiverr or otherwise.
Yeah, the example that I came up with in my head, Arthur Hayes uses a different one. He uses like an AI poet where you ask the AI and basically pay them to make a poem for you, give them prompts or whatever, and they have to pay. They use the database of all known poems to come up with a poem, but they had to pay for the rights to use it, basically. So you're paying them to use their service. They have to go out and get all this information, and they have to constantly get new poems, right? So there will be new poems made, and they have to constantly get the rights or whatever, so that they'll need to transact, and they could use Bitcoin, for example. So the example that I thought of was like, imagining this automated Uber that comes and picks you up, and then there could be automated repair or automated gas pump or it goes to this electric battery charging station, and it has to transact with another computer. How is it going to do that? It can't go into a bank and apply for a credit card, because one of the arguments I heard was, they can just use PayPal or whatever. But how did they get these authorizations to do all that? And if there is a 24-hour, decentralized, permissionless, can't be messed with, why wouldn't they use that? I just thought it was a really intriguing argument. And then you think, okay, there's 7 billion humans, and we constantly talk about Bitcoin and the network adoption. With 7 billion humans, how many possible AI agents could there be? Way more than 7 billion, potentially, right?
Oh, absolutely.
There could be one for every task, almost.
Oh, yeah, exactly. And so just considering this grand scheme of potential tasks that they might have to complete, it would be pretty significant.
Yeah, so that just blew my mind in terms of the potential and what's different about this cycle. So that we have this integration of AI and crypto, and it never really crystallized the possibility of it till recently. It was nice having a couple weeks off, touch some grass.
Yeah, all of this bullish stuff comes into a little bit less bullish conversations about what's different this cycle. Bitcoin hasn't really taken off or had a halving and a bull market in a rising rate environment. And Larry Fink, in his interview, said to expect 2 to 4 more quarter basis point hikes. I think that's a little bit bearish compared to what most analysts are predicting, but we are still in a rising rate environment, which is very different for a Bitcoin halving compared to previous cycles.
Yeah, he mentioned that there was like a large infusions of funds that's fueling the economy right now. The infrastructure bill, the CHIPS bill, the IRA bill. I'm not too familiar with all of this, but he said basically there's a lot of money coming from government being infused into the economy as fueling it, and it may require more rate hikes.
Yeah, right now we're seeing the next FOMC meeting is in just over 2 weeks, 16 days, on the 26th of July. And there's almost unanimity that there's going to be a quarter basis point hike at this next meeting. We're talking 93% to 7%. And the 7% is predicting that we keep rates the same. So a pretty strong unanimous position. Then there are some analysts that are saying 2 is a possibility. We're talking 22% for the late September meeting that are predicting maybe another rate hike. And it grows a little bit heading in towards the end of the year, hitting between 34 and 28%, with some even expecting another quarter basis point hike by December, but only about 5%, minimal. We're starting to have a different conversation. People are actually expecting held rates through the end of this year. And if we look about a year out, expectations are leaning mildly towards some cuts, but not to the same degree that we had previously discussed.
This quick pivot that was expected by everyone.
Yeah, we're now looking at 31% next July are expecting the rate to be at 4.5 to 4.75%, which would be right now would only be a half basis point cut. If we get the rate hike that we're expecting, a 3/4 basis point cut a year from now, which I think is still maybe a bit aggressive, but it's a lot less aggressive than some of the analysts that were predicting a rate cut by December or multiple rate cuts by December.
There was also this expectation that a recession would have started or be easier to see it coming. It just hasn't materialized.
No, at least not in the way that everybody's expecting. Not in the traditional recession discussion, at least.
Yeah. All right, we can get into some updates from some of the chains, and Binance seems to always be in the news. They've had some interesting discrepancies on their exchange in the Bitcoin price, Ether price, even in Tether. The Bitcoin and other digital assets with Tether are currently trading at an 8% discount on Binance US, a situation attributed to liquidity issues on the platform following a lawsuit filed by the U.S. Securities and Exchange Commission. And also they had an issue with the Ministry of Justice.
Yeah, they're being investigated for CZ is being investigated for fraud. Yeah, Binance US. So let's make a distinction. Binance and Binance US they're technically the same but different exchanges, and so Binance US has always had less liquidity, but with the closure of onboarding, you've essentially only got people trying to sell to take their crypto into cash. You can't really onboard new fiat at this point onto Binance US, and so that would explain why we are seeing these discrepancies. If you've only got people with selling pressure, other than people that are maybe like looking to bring it onto the network, buying, you're gonna have at least some kind of discrepancy.
No, that's a fair point. It just seems to eventually attract arbitrage trade, but yeah, it's just maybe hard to do. But with the depeg with Tether, it's always a little concerning. Tether is always getting flooded too. But their CTO came out with a statement about this. They said Binance US is going through some legal challenges, so it probably doesn't have any market makers willing to arbitrage at this moment in time. Tether is in charge of its primary market, Tether.to. Market making secondary markets, aka crypto exchanges, is the role of arbitrageurs and market makering professionals. That is a tough one to say.
Yeah, Binance US is a pretty isolated platform, and I think, there's just you can't really take Tether, like the Tether price that's being discounted is the Tether USD price, and so you probably don't have a lot of people that are able to get USD onto the platform to buy that Tether to then proceed and arbitrage it somewhere else. So it makes total sense.
Yeah.
And I wouldn't really be concerned about its impact on the global market. Normally, if you're talking about Binance Global, then you're talking a much larger pool of liquidity with a lot of different people being able to access the platform. Although that pool of people is slowly getting smaller, we've been seeing a lot of countries within the EU essentially shut down the ability for Binance to operate within the country. The Netherlands, Belgium, Germany amongst them. We've also seen Nigeria step up against Binance. They're facing tough conditions on multiple fronts. With that said, they're facing even more tough conditions. We've seen several large execs from the Binance global team leave this week following a meeting with CEO CZ, including their general counsel and the chief strategy officer. There's discussion that those are just the tip of the iceberg and that there's a lot of maybe less public mid and senior level executives that have also jumped ship or will be jumping ship in the next little while. People are raising this as a major FUD case.
Whoa. Hang on. 4 is just business turnover. You buying that?
I don't think it's just business turnover. Some of these people are people that could actually face legal action of their own if Binance were to be found guilty of fraud.
Yeah, like where there's smoke, there's fire. There's a lot of smoke around Binance right now.
Yeah, the general counsel and their chief strategy officer and chief compliance officer is one of the other ones. They're people that could face fire if Binance is found guilty of fraud, if it was found to have gone on under their watch, during their tenure. And these people are probably making the smart decisions for their careers and leaving potentially to better offers at maybe more TradFi firms or maybe even at Coinbase, who knows, and kind of covering their asses.
They're getting off a sinking ship.
Yeah, they're covering their butts before, the fight gets really intense. And
it's hard to get too excited about Binance these days.
Yeah, the exchange, we've talked about this ad nauseum. Exchanges are dying. Exchanges are like Operation Choke Point 2.0 was really about killing exchanges. When we were originally thinking about it, was trying to kill crypto. It was really trying to kill exchanges because they were targeting onboarding mechanisms that weren't through the traditional banks. And so I think this is just something that everyone was talking about and was realizing, but we were slightly off the mark. We were maybe going too far into thinking what they were trying to do. It's kind of interesting. With that said, one of the things that really did get impacted is Gemini, who's one of the last kind of standing exchanges, although they're having issues of their own, especially with their Gemini Earn product, which was originally partnered with DCG, a digital currency group which operates Grayscale, CoinDesk, and a lot of other crypto kind of related ventures. Gemini actually just sued DCG and their CEO and founder Barry Silbert in New York court for fraud, saying that DCG defrauded them and the creditors by lying about their liquidity. They're saying that Genesis and Barry Silbert himself organized a meeting to encourage Gemini to continue their Earn program, which was using Genesis as a lender to help them earn interest through their Earn product, and that they say that Barry Silbert did this knowing that Genesis was massively insolvent. Barry Silbert had claimed that it was a timing issue, but there was a pretty gaping hole of almost $1.2 billion in Genesis' balance sheet. This probably doesn't come as a big surprise to anybody. That hole was discussed ad nauseum during the FTX collapse. Everyone thought it was FTX that was really responsible for this hole, but it was actually the collapse of Three Arrows Capitals in June of 2022 that was responsible for this massive hole in Genesis' balance sheet. And Genesis basically covered it up until FTX, and it didn't have any more choice than to come clean.
We're still seeing fallout from the beginning of this bear market, and FTX and Three Arrows Capital has kicked off the beginning of this whole bear market.
Yeah, I think this is one of the more interesting bear markets because there has been a huge kind of spider web of falling dominoes related to what is like gonna fall and where liquidity is drying up and why that liquidity is drying up or disappearing. And this is not a small piece. When some people have been talking about exactly how much money has been lost in DeFi or in crypto since the founding, the numbers out there are about 22 billion.
Wow.
And a huge chunk of that, I think most say it's about 30 billion since 2012, but about 90% of that is in the last 2 years. So essentially within this last bull market.
I mean, from my recollection, it started with Terra, the Doquan.
Well, those Three Arrow Capitals started collapsing at the same time as Three Arrows, and yeah, with Doquan.
And it seems to have slowed down. Like the dust may be settling, and maybe this lawsuit is kind of part of the finale.
Yeah, I think with these ETFs and this lawsuit, we're essentially seeing the slow death of exchanges, and we're seeing maybe that slow kind of closing of all those negative doors before we head into the bull market.
And it's nice to see Bitcoin leading the way. The original, the OG, the inventor of the blockchain.
They always lead the way. Bitcoin always leads the way heading into the next bull market. It's something that is not unexpected.
Web3 and DeFi is not without its promise. There has been a lot of talk about the tokenization of assets, and we're seeing this a little bit in the real estate market. Airchains is partnering with an Indian company, West Bengal Newtown Kolkata Development Authority, it's a mouthful, to digitally record and track the land ownership and mutation system by using blockchain. Airchains will introduce 500,000 NFTs deployed on Polygon Supernets. And they're having a little bit of a mini bull run recently, too. I think they're up 8% today. Transforming the land mutation process across 27,000 acres, and it will replace traditional bureaucracy with a transparent and secure digital system. The blockchain model also facilitates fractional property ownership, opening up to 1 million new mutation opportunities. This solution will allow easy transfer of ownership rights for landowners by transferring corresponding NFTs, thereby eliminating the complex paperwork. It will enable digitization of proof of records as distinct NFTs and updation of NFT records in cases of transfer, recovery of records in cases of loss, and prevent evasion of mutation charges. So this is an interesting Web3 development.
It's really
in real estate.
Yeah, it's essentially taking the land tenure system in this particular county in India and taking it onto the blockchain so that you don't have issues of people basically stealing land, because land documents are more easily forged and misplaced there or destroyed. Canada has their own issues with the land mutation system. We're seeing a lot of people fraudulently sell houses from vacant owners or owners from other countries, and we're also seeing like people fake rent out a lot of properties from that aren't their own. And this is one of the many use cases and one of the primary use cases that I saw for the NFT system. I see it going for cars as well in the future.
And it's my understanding it's like a private. The Supernets, are they all private blockchains?
I believe yes. I believe
it's like gasless, private. So it's like it's like their own private little, but gasless apparently.
Yeah, I think they probably have to pay, or maybe be running like somatic nodes to actually operate the network. But I think,
somehow have to get it onto the main chain. But yeah, a little subnet reminds me of AVAX a little bit, like a subnet. Supernet though,
but they're called supernets because they're better than subs.
Right.
Language is important. Super is better than sub.
Yeah, fair enough. No episode would be complete without a little bit of degen news. Yeah, did you hear about the SHIB update?
No, because I'm not a CDO like you. I'm not a degen.
I'm not a complete degen. I'm mostly a maxi, but I can't help but want to scratch an itch sometimes. But in July 6th post, the Shibirium developer, the main developer, Satoshi Kusama, said the team will have discussions and possibly release the highly anticipated Layer 2 Shibirium during the Blockchain Futurist Conference in Canada. It also announced that the Shiba Inu Ecosystems world paper and detailed information about the Treat token will be released. Yeah, I don't know if you're going to that big event over there in Canada, but
I gotta see where it is. I don't think it's on my coast. I think it's on the other one, and that's a little too far.
Oh, okay, yeah, it's just like around the world, basically.
Yeah,
but yeah, a little action in the meme coin world.
Yeah, a little bit. It's hard to call SHIB a meme coin even nowadays.
It's a Layer 2, yeah. It's definitely taken on a life of its own, that's for sure. But it's like, it's way down. I don't know if this can change it. I don't own any SHIB and have really no intention of buying any, but I still think it's interesting. I watch it. I still watch the space.
Oh yeah, absolutely. Well, I think it'll be interesting. I don't know if we'll see something come of it or not, but it's been holding on. It's still there, so
yeah, compete against Pepe. We've had our little meme coin season, and we'll see if any of these kind of older meme coins come back, outshine all the fun new toys that are out there. But yeah, we can close it there. Thank you for listening to Decentralized News. We post to YouTube first, so please consider subscribing to catch the videos as soon as they drop. Our goal is to provide unfiltered content to help foster genuine discussion, help this entire space grow. Please remember, this is not financial advice, and we are not financial advisors. Ozzy, are you a financial advisor?
No, I'm not a financial advisor.
Okay, I didn't think so. This show is presented for educational and entertainment purposes only. Please do your own research before making any investment decisions. Thank you for your support, and stay tuned for the next episode.